Welcome everybody. It's the Max in the Morning Show. We got
Live with Rich.
David G.
Duke.
And it's your boy Charvar, man.
and we giving juice and gems. All right, let's get right into it. This is when you look on the outside when you're not trading the markets. It's a whole different vibe, and I love it. I think it's a pretty. It makes me just a little bit more correct sometimes, right? The emotions is not really in it, and the market I don't think is closing up past 4,800 before the new year. That would be big anyway. But I think it was like 5 points off yesterday. And that's it's a pre-market show, 8 to 8:30. So when we announce how the market is doing, the market opens at 9:30. Anything can happen by 9:30. The market is up only 1 point. I suspect it'll be red today. Bitcoin and crypto, which Dave Rich Duke will discuss further, but that's down right now. So things change that quick in a matter of a day to two. Because I thought Bitcoin had a last minute Santa rally hitting above 51,000. So yes, guys, the S&P is flat, literally. Is like 1 point from red. Gold is 19 points down, over a little over 1%. Nasdaq up 12 points. That's almost flat. These are measured differently. We'll talk about these indexes. So with Nasdaq up 12 points doesn't mean much, right? It'll be red any minute. Silver is down almost 2%, okay? And the Dow is down 13 points. So that's what we're discussing today. We're going to break down the differences between MATIC, Ethereum, and BNB. Very important moving into the new year so we can easily have this podcast posted everywhere because many people do not understand it. And the key to this, especially when we launch our crypto, is knowing how to get these cryptos off of exchanges. Because the best cryptos, especially if you want to be early, they're not listed. They're not listed just yet. That comes almost last. The ICOs, initial coin offerings, and I'll discuss after are done speaking, the co-hosts on what exchanges are um, uh, centralized as well, but they're still not as big as Coinbase and Binance and crypto and others of the likes. So, Dave, you want to get us started with the gas fees and just explaining?
Good morning, everyone. Um, a gas fee is pretty much, to keep it simple for anybody that's new to crypto, it's a fee to transact on a network such as Ethereum, MATIC, or BNB. Um, of course, Ethereum is the most expensive one right now. That's a problem that they have. Uh, to keep it simple, the alternatives, BNB and MATIC, are a cheaper alternative. And I'll let Rich add to that if he wants to.
Thanks, Dave. So when you're dealing with certain tokens, you have to realize there's a lot of them that came out prior to a lot of the ones that are out now. Ethereum would be a POW token, which would just be proof of work. And I'm going to give you um, the full definition of it. I'm going to give you what they state what a proof of work is, and then I'm going to elaborate more on it. So, proof of work, POW, is a form of cryptographic proof in which one party, the prover, proves to others, the verifiers, that a certain amount of a specific computational effort has been expended. Verifiers can subsequently confirm the expenditure with minimal effort on their part. So basically, when you have a miner fee, or the gas fee, which is what it's called, it's miners who are pushing that transaction through and verifying it. So it's going through multiple routes before it gets to the person that's doing the transaction. So it's actually showing that, hey, I received it, it's getting processed, and I'm pushing it through someone else. The gas fees actually work as almost like a middleman, and the middleman would just basically be a verifier of the transaction, so to speak. Like Dave was saying, Ethereum has the worst gas fees out there, period, and that's just due to the fact that it is a proof of work token. A lot of tokens that they're kind of leaning more towards would be proof of stake tokens. These tokens that or ones that are out now, uh, BNB, MATIC, Polygon. You have XLM. There's a few that you can use. They're very cheap to use. The transaction fees on them are almost minimal, less than pennies at sometimes. The difference between the three is that the other two work better and more efficient than Ethereum, which would be BNB and Polygon Matic. These are going to be the tokens that you're going to want to use, and they also have smart contracts developed on them. There are networks that people use, which would be Binance, Polygon. I'm not 1,000% sure on the network that they're using, but I believe they had is it a fork that they had off of Ethereum, Dave? I know you can switch on the NFTs from OpenSea, and you can use change them into Matic or Polygon. But these tokens that you're using is basically how you're going to transact between one another, but it makes it more efficient and more cheaper to get access to certain things on smart contract type applications. So if you're dealing with NFTs, you're not going to really want to deal with Ethereum because Ethereum, the gas fees are huge. So if you're doing a $50,000 transaction, they're wanting like $10,000 off of that for the gas fees, and that's just because the network gets very bogged down. You got a lot of tokens that are running on top of the Ethereum network, which will just be ERC20 tokens.
And Rich, 1 second, and your just continue right after me, real quick, so people can understand even further. That you can always check how much the ETH gas fees are going to be. What is that site again, Dave?
You can go on Etherscan. Just Google Etherscan, and all the way at the bottom there'll be um there'll be a list of transaction fees. It'll tell you exactly what the fee is to send Ethereum. Uh, it'll tell you what the fee is to send a different ERC20 token uh, back and forth via decentralized platforms, and it'll also have another function called an LP. It's an LP something, and that'll pretty much tell you how much it'll cost to stake on the Ethereum network. It's pretty detailed. Also on Etherscan, you could you could verify transactions. You could look up if your transaction is pending, how long it's going to take. So it's
And
a
that's
very
only
detailed
if you're
site.
using ETH. And Rich is going to explain further and finish what he was saying. That's only if you're using ETH, but it's just so people can understand how much they're paying in gas fees even ahead of time. So, for example, uh, it happened to me. Maybe something of $100 can cost you $30, just for prime example. Because Rich said 50,000, which is very true. But just so you know, the average person talking to the audience is maybe using $100. That's how expensive ETH is. You would have to account for maybe $30 to $40 if you're doing it during busy times. I've never seen it drop lower than probably $20. Okay, go
Uh,
ahead, Rich.
um, I
Oh, go
actually
ahead.
want to add real quick. Right now is probably the best time to transact on ETH because the gas fees have they're not extremely low, but
When
they're
you say
decent.
time,
It
you're
was
talking
actually
about
lower.
8:11 a.m. Correct?
No, I mean the weekends are normally the cheapest time. I'm just saying that right now it's pretty reasonable
Why
right
is
now.
it reasonable right now? Why are you saying that? Is it because of 8:11 a.m. or is it because ETH is at
I,
3,700? Which one?
yeah, I think ETH being down in price has a role of doing that, and maybe people are not really doing too much with the NFTs right now. There's a lot of factors that go into it. So it's not the cheapest it's been, but it's at a fairly decent. It's in a decent range.
It's when definitely what Dave was saying, when the price is down, that's the best time to utilize it. You just got to kind of look at it, and again, I have my bias towards the Ethereum network, because it doesn't operate efficiently at all. The proof of work does not work at all, and that's for Bitcoin and Ethereum, as opposed to other tokens that can get the job done quicker, faster, and cheaper. They're not gas hogs, but they're energy hogs. Both of those tokens are very energy consuming. So when you got to look at it like you running a race car and you're running it at 200 miles per hour, but you're running it at 200 miles per hour for a long time, it's going to get hot and overheated and it's going to bog down. And that's exactly what happens with on the Ethereum network. When the price starts pumping real hard, there's a lot you got to think about everything that's built on top of the Ethereum network. There's over 4,000 tokens that are ERC20 that people have created on the Ethereum network. Then you got to add in NFTs and other smart contracts that are running off the Ethereum network, which makes it hard to do transactions. So anytime that you do a transaction with somebody and you do it on the Ethereum network, you're going to be looking at crazy gas fees. Again, I don't want to get too deep into it just because, and I don't want to have like a negative outlook with Ethereum, because it's been shown that Ethereum is the chosen one as far as Web
But
3.0
Rich,
included. Go ahead.
and also, what about we want to talk about MATIC, because we definitely dedicated a whole show